Hello traders, Gary Wagner here. It is 1 o'clock in Honolulu, 6 o'clock in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 22nd day of November, 2024, and this is the evening report for gold and silver, our weekend review. Vladimir Putin issued a dire warning to the United States and its allies.
Наших друзей во всем мире, а также тех, кто продолжает питать иллюзии о возможности нанесения стратегического поражения России.
In a dramatic demonstration of gold's enduring role as a safe haven asset, gold recorded its most substantial weekly gain in years. December futures climbed by 5.87%, a net gain of over $150. The December contract opened at $2,571.50 and is currently trading at $2,718.20. The daily gains were strong and consistent throughout the week, with a net gain of $48.70 on Monday, almost $20 on Tuesday, $18.40 on Wednesday, $18 yesterday, and capping it off with a $46 rise today. A quick glance of a weekly candlestick chart clearly shows how strong this week's gains were, with the candle size dwarfing every other large candle over this year. Our current model, through the eyes of an 8-hour standard candlestick chart, shows that we completed our primary motive phase, waves 1 through 5, at the end of October, entering a correction that we are labeling as an A, and we are currently within our B wave. Typically, on a B wave, we look to see gold regain anywhere between 50 and 75% of the price drop in A. However, we have to acknowledge that the recent moves down as well as this move up is absolutely fundamentally entrenched, and therefore, in terms of picking a price point in which gold could trade to, we have to look at the possibility, as remote as it is, that we will get what is called an irregular ABC correction. In a standard ABC correction, commonly referred to as a zigzag pattern, you get your benchmark wave, which of course is your A wave in the case of a correction. You look at the B wave, as I said, to go between 50 and 75%. That of the decline in the A wave. Your final C wave, if it's a flat, will have an equal low, A and C. If it is a standard zigzag, the C will occur below the conclusion of the A wave. Although a rare occurrence in Elliott wave theory, an irregular ABC correction refers to a corrective pattern where you get your A, however, your B wave itself extends significantly beyond the starting point of the A. In other words, it can go above the conclusion of the primary fifth wave. Typically, this type of irregular pattern does end up as a flat, meaning that the final C wave typically will fall to the same price point as the conclusion of the A wave. The image that we have up, that is on the left-hand side of the screen, goes through 3 variations of this type of correction: a regular flat on top, an expanded or irregular flat in the middle, that's the one we have focused on, and what is called a running flat on the bottom. Because of the elevated geopolitical concerns involving Russia, the United States, and NATO, we could see a major move in gold unfold even during this corrective period. For right now, we are assuming that we are going to get a typical ABC, meaning that we will run probably as high as 75%, seeing as we are almost there right now at $2,718. Traders, the escalation of geopolitical conflict in Russia and Ukraine has made this an extremely fluid scenario with many, many unknowns in terms of where it could lead, and hopefully whether or not this escalation could provide some talks or get us closer to a resolution of this conflict that is now going on its third year. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.